So, what's up, guys? Welcome to my YouTube channel, 50 Sri Lanka. So, today I'm going to be doing the fourth lesson of Grade 10 Commerce Accounting, Introduction to Accounting. So as always, I'm Henuka Dasanaga. So, today I'm the one who's going to be host this video. So, you might get wonder that, sir, why you are in a dark place? So nowadays, all of you know that we have a power crisis, right? So we have a power cut right now. So, but it doesn't matter to our lesson. We can carry it out. So I hope you guys will love this video, and I hope you guys will watch this video up to the very end, because this will be the foundation for your accounting part of the syllabus. So this will be an interesting and informative and wonderful lesson, I bet. So let's get started. So as I said earlier, today's lesson is going to be the fourth lesson of grade 10, which is Introduction to Accounting. So this will be a really great lesson, right? And this will be a very important lesson for you guys. So let's move to the video. All right. So what is accounting? Under 4.1, under the subtopic of 4.1, we have to discuss exactly what is accounting. So let me take my pen first. So let me take a color, right. Accounting can be explained as a process of providing information required by the interested parties of a business for their decision making. So one of the most fundamental objective of accounting, right? Most fundamental objective of accounting would be providing relevant information to their stakeholders, to the stakeholders of the business, right? In order to take several decisions, right? So these stakeholders would be owners, managers, and potential investors, right? Like that. So financial information is very important in decision making of a business. So when it comes to decision making, right? So as I mentioned earlier, financial information is really important. So that's why we need accounting, right? So let me move to the first sentence. Okay, so accounting can be explained as a process of, right? It's a process of providing information, right? Which kind of information? Actually, financial information. Here we can see, right? Required by the interested parties of a business. So I have already mentioned about the examples, about some examples, right? So third sentence, accounting that mainly provides the financial information is called as financial accounting. So in your syllabus, I think in grade 10, in your grade 10 syllabus, you only have to study about financial accounting. So there is another type called management accounting. So let me quickly draw, right? Accounting can be divided into two. One is financial accounting, right? And the other one is management accounting. Like that. There are two sides of accounting. So in this lesson, we are going to focus on financial accounting, only on financial accounting, not on management accounting. So let me first of all clear and move to the next slide of this presentation. So objectives and need of accounting. So as I said earlier, there is a fundamental and main objective of accounting, that is providing financial information to stakeholders of the business. That's it. That will be the primary and the main objective. So other than that, there can be some sub-objectives as well, right? So let's see. Choosing yellow color. So the business activities also impact various other parties. Yes, all these parties, including owners and debt holders, are named as interested parties, stakeholders of a business. Okay, other than those owners and debt debt holders, we have so many other stakeholders as well, right? So the business activities also impact various other parties. Yes, all these parties, including owners and debt holders, are named as interest party. So mistakenly, guys, I have repeated the same line again, right? So you have to neglect that. I'm sorry, right? Accordingly, providing information for decision making is the main objective of accounting. So once again, I think this is for the fourth time, right? So the main objective of accounting would be providing financial information to stakeholders of the business, and that's it, right? So I'm gonna circle it, guys. This is the most important part of this slide, right? Just a one sentence. All right, let me clear this first and move to the next slide. All right, we have what we got here. Okay, let me quickly remove my video. Okay, so based on this main objective, there are various other objectives, and few of such objectives are given below, right? So other than this main objective, we have some sub-objectives as well. So let me take the pen. So let's go with the blue color. I think it's good. What do you think? Orange. So to know whether the business has earned an adequate profit. So let's assume that I am an owner of a business. So definitely, guys, I want to know about the profit of the business, right? So that will be one sub-objective. And the second one, to know whether the financial position of a business is sound, right? So to know whether my business is financially good, right? We are capable to pay our debts, short-term debts, whether we are capable to cover up employees' wages, like that, right? To check our financial strength, right? One, to fulfill legal requirements. Presentation of financial reports is a mandatory requirement by law for some organizations. Mandatory means, guys, it is a must, right? So according to the 2007 Act of Company Act, 2007, number 7, Company Act, they have said that it is a must to present financial statements to their stakeholders, right? Especially for what? Public limited companies. So if you have a soundful knowledge about the lesson number 3, in that you have learned this, right? You got the point, right? I'm not going to refer to that part, okay? I'm talking about the companies, guys. So to minimize disadvantages arising through omission and commission of transactions, and to organize financial activities. To minimize the disadvantages arising through omissions. Omissions means magga, right? But right, we can. Commission of transactions. All right. So I think you may have a little bit of understanding about the sub-objectives of accounting. So let's move to the other slide. So before we are moving, we need to clear this one. All right, we go again. I think we have 2 other, oh no, these are just 2 sentences. So in order to fulfill above objectives, accounting provides various types of reports to the interested parties. So mainly, guys, we have 2 main reports, right? So when you come to grade 11, you will learn those 2 reports, right? So I'm gonna just mention those 2 financial statements, right? So we call financial statements for that. Number 1 is income statement, right? In Sinhala we say Adayam Prakasha. And number 2 is statement of financial position, SOFP, statement of financial, like that. So when you come to grade 11, you will definitely learn this. And These reports are generally termed as financial statements, as I said. These financial statements are based on the business transactions, right? So we use day-to-day transactions. It's like selling, sales, and purchases, and paying the electricity bill, like that, right? So I hope you guys have understood up to this point, right? I think, right? Okay, so let's move to the other part. Business transactions. All right, this is going to be an interesting part. I may see, but let's see. A transaction can be identified as an exchange of resources, right? A transaction can be identified as an exchange of resources between a business and other parties, right? So that's what you call a transaction. Guys, you guys don't need to by heart this sentence, because when it comes to your exam, they don't ask for the meaning of a transaction. Just read, right? Transaction can be identified as an exchange of resources. Identified as an exchange of resources between a business and other parties, right? For an example, if I sell an apple for a purchaser, my resource would be apple. I will offer him the apple and he will give me money in return, like that. That will be a simple example for a transaction. Okay, so in a business, there can be various types of transactions. There are a hell of a lot of transactions, right? So among those transactions, the transactions of which their value can be measured in terms of money. So here, guys, we are talking about a very important part. So let me take the blue color one. Among those transactions, so there can be so many transactions, right? So among those transactions, read this carefully, okay? Transactions of which their value can be measured in terms of money. Only money measurable transactions are considered when it comes to accounting, right? If a transaction cannot be measured in monetary value, cannot be measured in money, right? Using a monetary value, we don't consider it in, I'm sorry, wait. It in where? My just fell. All right, it in where? In financial accounting. So we don't consider money, money measurable transaction. Actually, we do consider money measurable transactions, only money measurable transactions in financial accounting. But when it comes to management accounting, where at 10 students, we don't have to study about management accounting, but just remind that just keep this in your mind. Just keep this in your mind. In management accounting, when it comes to management accounting, they do consider about the things which cannot be measured by money. For an example, say we are talented, right? We have a talented worker who's dedicated for their job, who's working greatly, but we can't measure him using a monetary value, right? So we can අපිට එයාව monetary value එකකින් මනින්න පුළුවන්ද? Can we? මෙයා ලක්ෂයක් වටිනවා. We can't, guys. We can't put that worker into our financial statements. So there is a big loophole, I think, in financial accounting, because we don't include that specific valuable person in our financial statements. So that's, I think, it is a little bit of, I think it can be considered as a disadvantage of financial reporting. So it's up to you, right? So, but when it comes to financial accounting, we only consider about money measurable things, right? So some of the examples for money measurable things will be sales of goods for 100,000. So there is a value 100,000, right? And the second one, monthly salary payment of 50,000, right? Here also we have a value. Obtain a bank loan of rupees 300,000 and electricity payment 5,000, like that. But we can't include that specific worker, right? So that previous example I mentioned, but right, so there is a worker. He is very dedicated. He is powerful. He is inspired and motivated, and he is strongly willing to do their task, to do his task. But we can't include him. Why? We can't measure his talents. We can't measure him using a monetary value. So we don't include him into our financial statement. So I hope you guys have understood about the things, about the thing of money measurable, right? මුදලින් මැනිය හැකි ගනුදෙනු විතරයි අපි include කරන්නේ. Right, let's move. John, let me take the yellow color. And can we move this a little bit? In addition to the exchange of resources mentioned, some events that had occurred in business are also considered in accounting. Okay, some events, right? So we have already discussed some examples for transactions, and also we have some events as well, which can be measured in monetary, which can be measured by using money in a monetary value, by using a monetary value, right? So examples would be damage of trade stock. So this is not a transaction, obvious, right? We don't exchange some resource, right, for something. There is a clear event, right? Damage of trade stock. So which worth of 10,000. So this will be an event, but this is also considered in financial accounting because this is a money measurable thing, right? And a trade receivable that becomes a bad debt. That means, guys, a trade receivable means in single we say ණය ගැටිය. So in day-to-day basis, we as a business, we used to sell goods on credit basis. ණයට අපි බඩු විකුණනවා. එහෙම ණයට විකුණපු කෙනෙක්ට අපහු අපිට සල්ලි දෙන්න බැරි වුණා. අපි ඒ සල්ලි දෙන්න බැරි ණයට විකුණපු කෙනාව consider කරනවා bad debt එකක් විදියට. එයාගේ value එක which is equal to 3,000 according to this example. So that is also not a transaction, but that is an event which can be measured using a monetary value, which is equal to 3,000 according to this example. And these events are also considered as transactions in a broader sense, right? But in financial accounting, we have transactions and events, right? Which can be measured using a monetary value. Only money measurable transactions and events, okay? Keep that in your mind, right? But when it comes to the broader way, those events are also considered as transactions, right? So transactions could be made either on cash or credit. That's obvious. සල්ලි වලට වෙන්න පුළුවන් මුදලින්. එහෙම නැත්නම් credit basis means ණයට, right? All right, let's move to the other part. 4.4. So under 4.4, we have assets, liabilities, equity, income, and expenses that arise from various transactions. So බලමු අපි මේ මොනවද කියලා. Elements of accounting, right? Okay, now you guys know the answer. So when it comes to accounting, when it comes to financial accounting, guys, we have altogether 5 basic elements of accounting, right? So number 1 would be assets. What come in singular? Liabilities, වගකීම්. Equity means හිමිකම, right? And income means ආදායම්, and expenses means වියදම්. So altogether we have 5 elements in accounting, right? So let's see what are those, right? So let me, okay, right. So I'm gonna take the pen again. Give me 1 second. All right. As a result of transactions, following accounting elements arise, right? Transactions includes events as well, right? In a broader way, events also can be considered as transactions, right? So as a result of those transactions, following accounting elements arise, right? So it can be an asset, liability, expenses, equity, and income. So according to this lesson, now we are going to talk about those 5 types of elements and some examples for each of those elements, right? So continue watching, do not skip, right? Okay. So let me keep going and right, assets. So what do you mean by assets? Assets means what comes. Another term would be what come. So what do you mean by that? What come? Asset. So the resources that are generated as a result of past transaction are simply called assets. Read it again, right? The resources that are generated as a result, right? Resources that are generated as a result of past transactions are simply called assets. So examples would be purchase of a machine by a business. So that machine is an asset, right? The purchase of a motor vehicle by a business for their use, okay? Only for their use, not for the reselling purpose. For their use would be an asset. So in order to recognize an asset in accounting reports, its cost value should be able to be measured reliably. Okay, assets generate future economic benefits to the business. So this will be theoretical parts. I hope you guys will read the textbook according to have a brief understanding once again, right? So when it comes to an asset, we guys need to measure the value of that asset reliably, and definitely assets will generate future economic benefits to the business. So that will be the asset. So I think we have, yes, we have that. Some examples. Color orange. If a machine that had been purchased by a business is used to manufacture and sell goods, the cash that flows to the business in future from that machine, yes, future economic benefits, right? So any type of asset can generate future economic benefits to the business. That's obvious. The profits that are generated by the future sale of purchased stock, yeah, purchased stock is also considered as an asset. So if any item does not generate future economic benefits, that item cannot be considered as an asset, right? If there will be no future economic benefits, we can't consider it as an asset, okay? So further, the item should be controlled by the business. This means, important point, right? Let's read. This means the business should be able to use that asset according to the discretion of the business and to take decisions of the asset. Right. Thanks, guys. Example. A vehicle, and also we have a rented motor vehicle. So we can't consider that rented motor vehicle, right? So we monthly. So for an example, if we pay a 50,000 monthly rent for that specific motor vehicle, that motor vehicle does not belong to us, right? Right? So the owner of that motor vehicle, maybe something that belong to us. That motor vehicle doesn't belong to us. So that specific motor vehicle cannot be considered as an asset of our business. Why? We can't control it, right? The only thing that we can do is we can use it for business purposes, but we can't resell it, but we can't change the paint of it, right? Like that, we can't control. We can't take the control of the asset. All we it, right? So the best example would be that rented motor vehicle, rented building, like that. Okay. All right. It's time to move to the next slide, I think. Right. Again, we have an example. So let's quickly read it, that as well. For example, the above mentioned machine and the stock should be able to be used by the business according to the discretion of the business. All right. A building on a rental basis cannot be. Okay. They have taken my example. So as an asset, as it is not controllable by the business, right? Right. We can't control that building because we can't sell it. We can't change the paint, right? We may be able to change the paint, but we can't go for bigger innovations of the building like that. So the following characteristics are observed of an asset, right? So the following characteristics are observed of an asset. So guys, this will be important because these are the characteristics of an asset, and you guys need to remember these three characteristics of the assets. So number one, arose as a result of a past transaction. In Sinhala we say අතීත ගනුදෙනුවක අතීත සිදුවීමක අතීත ගනුදෙනුවක හෝ සිදුවීමක ප්‍රතිඵලයක් ලෙස ජනිත වූ, right? Arose as a result of past transaction. Because of a past transaction only, or controlled by the business, it should be controlled, right? It should be under our control. Inflow of future economic benefit to the business. Yes. We are the characteristics of an asset, right? So I think we have already covered up the part of assets. So what do you think? I hope. But we haven't talked about some examples yet, but let's see whether I have mentioned some examples for assets, or else we can. Oh yes, we have another. Yes, we have a lot to talk about assets, right? So let's move. Okay, right. Let me take the pen again. Change it to yellow. An asset is a resource controlled by the business as a result of a past transaction and from which future economic benefits are expected to flow to the business. So that definition is constructed, right? It's built, right? That definition is built using the three characteristics of an asset. So please, after this video, we have to make a short note, include these three characteristics. So once again, they have mentioned that those three characteristics of an asset, right, arose as a result of past transaction and controlled by the business, and the third one, inflow of future economic benefits. So here we have some examples. Lands and buildings can be considered as assets. Obvious, right? Machinery, yes. Furniture, equipment, stocks, debtors, including receivables. Okay, so you guys don't know yet about debtors much, right? So when it comes to the lesson number 5, you may guys have a clear understanding about debtors and receivables, and cash at bank and cash in hand. Cash is also considered as an asset. So you guys have a clear understanding about the assets. So I'm trying to do what I can do. Okay. So if you have any questions about this part, please feel free to mention it on the comment section, because I will answer for each and every question you we do. So I think we have liabilities next. So let's see. The assets of business. Oh no. We have assets. මොකද මේ assets ඉවර වෙන්නේ නැත්තේ? The green one. Now, okay, the assets of a business can be categorized as two types. One is current, one is non-current. In English, we say jangamawatkam, right? Just in case. Current assets means, let's see, right? So, for an example, now, just to remind, right? Current assets means 12 months. Just keep that period in your head, right? 12 months. Within 12 months, that can be moved in or out from the business, right? That are expected to be used, sold, or converted into cash within a short time period as 12 months, right? 12 months, within a 12 months of period. So in the ordinary activities of a business are classified as current assets, right? So in ordinary activities of a business, there can be some assets that can be used to sell, that can be converted into cash, but within a shorter period of time, which is equal to less than 12 months. So those types of assets can be considered as non-current assets. So some examples would be stocks to be resold, trade receivable that needs to be recovered within 12 months. Other than that, we have cash. We can mention that as well. And so many current assets other than these three. Okay. All right. Let's go for non-current assets part. After that, we have liabilities. Oh, thanks God. We can get rid of assets. I'm just joking. You guys have to learn well. Okay. So let's move to the non-current assets. And so when it comes to non-current assets, more than time period would be more than 12 months. So all the assets that cannot be considered as current assets are Hey guys, I'm back. I just had a small break. I had a small break, so luckily now we got our power back. So I hope you guys will be okay because right? So I'm back, guys, because I was exhausted a little bit, right? Explaining assets and all of that, and I had no power, and yeah. Stretching because of all of that I had to stop, and here we go again with a refresh start. So let's see what we have to discuss under liabilities. Okay, so liabilities, payables of business that had arose as a result of past transactions could be simply considered as liabilities. All right, so as an example, a bank loan obtained from a bank and as an example for liability. And also, let's read. The business is bound to repay these liabilities. Of course, we are bounded, right? Business, we should and we must pay those liabilities back. Or else we can say we should settle those liabilities, right? In a manner. So therefore, there's current obligations. All right. When the liabilities are settled, the resources which generate from future economic benefits, assets will flow out from the business. So in order to settle down, in order to repay a liability, definitely there will be a outflow of assets, right? Outflow of our assets, future economic benefits, right? Assets will go out from the business in order to satisfy, fulfill, or else settle a liability. Okay, so let's move. With that, we have first once again, right? The pen, and let me choose white color. Alright. In setting a bank loan, it requires to pay cash or cash outflows from the business, right? Accordingly, following characteristics are observed of a liability, right? Result of past transaction. So the same characteristics which is used to express assets, right? So both are arose as a result of past transaction. Now you know, right? Second one, outflow of economic resources when settled is made, right? There is a definite outflow of economic resources when settling is made, okay? There will be an outflow of asset, right? So having a current obligation, වර්තමාන බැඳීම, right? So bank loans, because having a current obligation means we are bounded to repay, right? We should repay it, right? There is a bound. So examples would be bank loans and trade creditors once again. So let's see what we have next. So can be categorized into two as assets, right? So previously we categorized assets into current and non-current. So as well, so liabilities also can be categorized into current and non-current, right? So current means here also the same theory within a 12 months of period, okay? 12 months. Or current liabilities, the liabilities that should be settled within a shorter period of time, as within 12 months, right, are classified as current liabilities. So these are also termed as short-term liabilities. Examples would be trade creditors, one of the major is when goods are purchased on credit for resale. Accrued electricity, right? Payable. Accrued means payable. That is also a liability, and which is very short term. These that cannot be considered as current liabilities are classified as non-current liabilities. So we had the same definition for non-current assets as well, if you can remember. So example, the portion of the bank loan that needs to be settled after 1 year, right? So these guys, if we take a bank loan worth of 500,000, right? Let's say 500 for an example. So first year, if we need to pay 100 of that as a portion of that whole bank loan, right? As a portion, in the first year, you guys need to pay 100 of the total 500,000 bank loan, right? So this will be considered as a current one because we have to pay within 12 months. I think you can understand what I'm saying, right? And the rest of 400 is considered as non-current liability because that rest 400 we need to pay after 1 year, right? අවුරුද්දකට පස්සේ තමයි අනිත් 400 අපි සෙටල් කරන්න ඕනේ. අර 100 අපි current liability එකක් විදිහට consider කරනවා because it has to pay within 12 months of shorter period of time, right? But okay, so let's move to, okay, this is also important, guys. So let me change the color of the pen. Equity in Sinhala we say income, right? Income. The business has liabilities. A part of its assets has to be used to settle those liabilities. It's true, right? The settlement of such liabilities, the assets that remain belongs to the owners of the business is known as simply equity. Okay, the value of assets that belong to owners of the business is termed as equity. So this is the term. So let me show you the calculation. Okay, so simply equity, E stands for equity. Equity equals A minus L. A stands for assets, L stands for liabilities. Or else you can say assets equals equity plus liability. So this is the accounting equation. So when it comes to lesson number 5, I have already made a video, right? You guys can go and watch. And I think the part 1 has more than 5,000 views. So I recommend you to watch that, right? So is the accounting equation, assets equals equity plus liability. So it is easy to find, it is easy to identify the portion of equity, right? So simply, equity means the portion of assets that belongs to the owner, right, after settling down liabilities, right? You got it. So without further discussion, let's move. Okay, here we have. So they have taken an example as well. Example, let us assume that business has a 500,000 worth of assets and bank loan amounting to 200,000. Okay, so rupees 200,000 of 500,000 of assets has to be used to settle the bank loan. Therefore, the remaining assets of worth 300,000 belongs to the owner. So equity equals simply assets minus liability. So in a sole proprietorship, the capital invested represents the equity capital. Pragdane. කරපු කැපිටල් එක ප්‍රාග්ධනය යොදවපු ප්‍රාග්ධනය තමයි sole proprietorship එක, right? Only in a sole proprietorship, which is equal to the equity. Okay, these parts are easy, I think so. And income and expenses. So this part is also very important. Green color, income and expenses. Profit of a business is the difference between the income and expenses. Accordingly, profit equals income. Yes, right. Profit or loss, right? P&L means profit or loss equals always income should be subtracted by expenses. That's it, right? Profits belongs to the owner of the business. Of course, profits belong to the people, those who invest in their businesses. Obviously, they are known as owners, right? So therefore, profit must be added to the equity. Separately, and thereby it can be added to the equity. Yes. So profit එක මෙයාලා කියන විදිහට we need to add it to the equity එකේම කොටසක් විදිහට මෙයාලා අපිට කියනවා. So the equity and expenses could be deducted from the equity. In other words, equity is increased by income, right? Increased by expenses. So when it comes to the lesson number 5, which is accounting equation, so in that lesson you will understand about these things, right? So why do we add profit to the equity? So why do we add income to equity, and why do we subtract expenses from equity? You will understand this, right? So I'm not going to dig into deep from this in this moment. We discuss the lesson number 5. To you guys, almost 11 o'clock right now. So as mentioned above, income belongs to the owners. Therefore, it should be added to equity. As a result of equity increase, however, an increase of equity does not occur only from receipt of income. That's true. Income එකක් විතරක් ආව කියලා equity එක වැඩි වෙන්නේ නැහැ. Equity. So there are two, right? So when owners bring additional capital to the business, it causes to increase the equity, right? So whenever to add equity, right? Try to add more money to the business. As a result, our equity will increase, right? Then, right? ඒක වැඩි වෙනවා. ඊට අමතරව profits also can increase equity, right? Those are the two instances where equity can be increased. Therefore, income can be defined as, so this will be the definition, right? So income can be defined as increase in equity. Obviously, because of an income, there will be an increase in equity, but except without due to increase from capital introductions. Income කියන්නේ හරිද? capital investment එකක් නැතුව equity එකේ වෙන වැඩි. Got it? Right. We have some examples for income, right? Paying, yes, definitely sales will be an income, right? Is an income, okay? So interest received, this means because it's interest, okay? So rent received, commission received, those are the examples for income. So as income belongs to the owners, expenses should by owners. Okay, therefore expenses should be deducted from the equity and it causes to reduce the equity. Yes, how piece of equity does not occur only from expenses, right? Expenses hindamat නෙවෙයි equity decrease වෙන්නේ. මේ දැන් යාලා කියන්නේ හරිද? So when owners take goods or cash out of the business for their private use, which is termed as drawings, equity decrease. So there are two ways to decrease equity. Number one is because of an expense. Two is because of drawings. So drawings means withdraw money or cash from the business. So if owner needs some money, if owner needs some goods from the business, he can take whatever he wants because he is the owner of the business. So those things are referred to as drawings. Okay, so drawings are not included into the expenses. That's why they have specifically mentioned here that thing. Okay. Yeah, so when owners take goods or cash out of the business for their private use, which is termed as drawings, equity decreases. Right. So here we have some examples for expenses. Therefore, expenses can be defined as a reduction in equity except due to drawings. So the two definitions which are used for income and expenses are quite common, except the word except and drawings and additional capital. Those are the three terms that you need to keep in your mind. Okay, keep in your mind. So examples: salaries and wages. Obviously, it's an expense. Insurance expense, cost of goods sold. This will be deeply called in when you come to grade 11, right? You will learn this. Interest expenses. Okay. All right. Yeah, this will be the last slide, guys. So I hope you guys will exhausted, guys. I'm not kidding. Okay. No, I have a clear to you guys, but today I'm not in a good mood to do this. But I should record those videos because I missed some time. Like. Okay, right? Okay. Don't lose your confidence. Let's do this together, okay? So the difference between income and expenses is identified as the profit or loss. Now you know, right? So if it is a profit, it belongs to owners, and if it is a loss, owners have to bear that as well, right? So owners la profit එක expect කරනවා වගේම එයාලට loss එකක් આવොත් they have to bear it. They must bear that loss as well. Okay, so therefore profit or loss should be ultimately adjusted to the equity. So the වලටම profit එක add වෙන්න ඕනේ, loss එකක් આવොත් subtract. So then what remain are assets, liabilities and equity. The relationship among these assets, liabilities, and equity could be drawn into an equation. So, as I said earlier, the accounting equation would be A equals E to E plus L. Assets equals equity plus liability, right? So, this equation is named as the accounting equation. You can learn about the accounting equation in the next chapter, and I have already completed that part. So, this will be the end, guys. So, what do you think? Guys okay with my teaching, or do I need to improve something about your opinions? And so I hope you guys have enjoyed my video. Yeah, I was a little bit exhausted, but it's okay, guys. See you from a new video. Okay, so there will be hell a lot of videos. Video, and I hope you guys will watch those videos as well.